John. What's up, guys? John Johnson, Johnson Signature Group, Exit Platinum Realty. And this is the beginning of a number of mini series that we're going to be talking about this crazy real estate market. So, we're going to put together a playbook for you as a buyer, seller, investor, renter, even landlord, each and every single week. So, right now we're looking for names for this series. So for right now, we're going to call it the Buyer and Sellers Playbook, unless you guys have other ideas and options that I am definitely open to. But without any further ado, let's get into our first of many series. I want to introduce one of my preferred lenders, Joseph Falla, to talk about this market, what kind of programs are out there, because as you know, as a buyer, you're being priced out of everything that's in moving condition. So what other options do we have? Interest rates are rising, but it hasn't necessarily stopped all these buyers from bidding on the same home. So what other strategies are out there? So without any further ado, I'm gonna let this man introduce himself. I'm gonna hand it over to Joseph Falla. What's up, Joe?
Hey John, how's everything?
Good, man.
So yeah, it's funny you mentioned it's still a buyer's market out here. I'm sorry, a seller's market because the lines are still. I'm sure you're seeing them at your open houses. There's still 15, 20 offers
Mhm.
being put on these properties. It seems like Jersey. I moved here 5 years ago, and from what people I talk to, they say they want to leave Jersey. It seems like everybody wants to move to Jersey.
Exactly.
Um, and it's not even New Yorkers. When I go to open houses, I purposely look at license plates to see who's coming up to the house, and it's a lot of Jersey license plates, just people existing renters. Most of them are first time home buyers. It's just renters. Their see rents are getting to the same price as a mortgage. So what I wanted to talk to you about was what's happening right now. Is right now the market is getting certain people are getting priced out, right?
Yeah.
There, we all, we can only pull out so much out of our 401k. We can only have saved up so much money with all this COVID craziness, right? So another option that a lot of people sort of push back and a lot of lenders push back on is the 203k. The reason why is because it's a complicated loan, but only if you make it complicated. Um, at the bank where I currently work, we actually have a complete division that handles all of our 203k loans. So normally I would take an application in, pass it to my processor, we do all the disclosures and what have you. In 2 to 3 weeks, we're at the closing table, right? 203ks are a little bit more intricate because there's construction people that are involved. There are HUD officials that are involved. So there's a couple of extra pieces, but you don't have to really make it complicated. I think if you have a good relationship with the seller agent, and your buyer agent knows how to speak to it, because it is going to extend the length of the loan by a month or so, maybe a little bit less than that. It shouldn't be a problem. Just people make it more complicated than it is.
So, Joe, question. You're mentioning 203K, and for our audience, first time home buyer, 203K, that sounds like a whole nother language. We know mortgage, we got to take out a mortgage. We may have heard of conventional, we may have heard of FHA. What is 203K? What is that?
So 203k is an offshoot of a standard FHA loan, right? Everyone's familiar with the FHA loan. It's 3.5% down plus your closing costs, right? So what a 203k allows you to do is actually put in repairs of the house into the same FHA loan. Okay, so you can essentially buy a 2 to 3 unit that may need some work, and they will go down to the studs. That's actually one of the misconceptions, that they only think that it's minor repairs. There's two different versions of it, right? One is for minor repairs, and one is for more extensive construction, going down to the studs, new sheetrock, new electrical, right? And you can actually put this all into one loan, and they give you most times up to 6 months to do the repairs, right? So it can't be too extensive, something that's going to take more than 8 or 9 months. So they usually want it to be within a 6 month period. And you put everything into one loan, and they'll actually approve you up to the after repair value. So if you buy a house for 300,000, you have an appraiser that comes out. They say, well, with this, and that being repaired, the house will most likely appraise for up to 450,000. So we have that spread of the 150. There's other pieces to it, but you have that $150,000 spread that you can add mortgage payments while you're not living in the house. You can add the repairs and what have you into that one loan. That makes it much easier, and it's a fixed rate, but you could always adjust as the market adjusts itself as well. So the interest rates are a little bit higher on 2 or 3K loans, but you could, as the market adjusts, as we all predict it will do down the road, you could always go into a lower rate. You could
Okay,
basically
so
refinance.
you're saying I could put repair costs in my mortgage. So does that mean I now have to make two payments, one for the repairs and one for the actual mortgage?
It's all rolled into one.
So it's just one payment each
One
month,
payment,
and I
one
got
payment each month.
repairs to make to this house. I got in the same payment, I'm paying my mortgage as well.
Absolutely.
Okay.
Even if you're not living in it, you can, depending on the amount that the after repair value will be, you can actually put in a few months mortgage payments into that loan. So you're not renting and paying a mortgage at the same time.
Gotcha. 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 Now, are there any limitations as far as what kind of repairs I can make? Because I mean, I'm starting to see some distressed homes that need a lot of repair. Is there any limit as far as what I can or can't do?
They won't do any luxury repairs. So they won't help you put a pool. They won't help you put a new jacuzzi. They won't do any sort of electrical work for that. They won't let you put in a sauna. It's literally a handful of things compared to a list full of things that they'll actually repair.
Okay.
So there's no luxury things. They're not going to let you put, you know, a new 10-foot pool in your backyard.
Okay. All right. So
So
no
lawn care, no
additions.
lawn care. Lawn care is actually one other additional thing that they actually won't do as well.
Okay. All right. All right. So within
Sounds
reason,
unbelievable, right?
it does. It
You
does. So
Most
I
people
mean,
think that
within reason.
these are loans only available to expert investors. It's not. The government makes it. They want to put people in houses, and this is one of the benefits of having an FHA loan or getting approved for an FHA loan.
Okay, so let's talk about that. I mean, the government wants to put people in houses, um, and a lot of people, especially in this audience, first time home buyers, they're thinking, well, I probably need 10, 20, 25%. Now you're talking about throwing in repair costs in with my mortgage payment. So how much is my down payment going to be? It sounds like it's going to be
Three
a
and
lot.
3.5% down. 3.5% down plus your closing, attorney's fees, title fees, survey fees, reserves. So all the standard closing costs are still there, and it's only 3.5% down for an FHA loan.
Okay, so let's be clear for those out there. So for this particular product that Joe's talking about, it's 203K, 3.5% down for your down payment, but there are additional costs. So one of the things that happens a lot is that people focus on the down payment that's needed for the mortgage, but they forget about or they were never told that there are additional costs and fees that we call closing costs. So, Joe,
Exactly.
you're the mortgage guy. Percentage wise, how much in addition to this 3.5% could closing costs
I
run?
like to be conservative. I would say about an additional 2%.
It's about an
2%.
additional 2%.
Most of
So if we're
them, most of the fees are standard. Where it can vary is on the taxes
Mhm,
of the house. Whether the house needs flood insurance
mhm.
is another factor. But most of the other fees, and by law, we're supposed to actually disclose all of the fees that are attributed to the loan. So you're getting an accurate estimate. It is an estimate of what your fees are, and that I can provide to anyone for free. I have a cost analysis program that I send out to people just they're just trying to get an idea, and that's pretty easy for me. If anyone wants to reach out to me, I'll provide my information on here. You could just reach out, and I can give you an analysis on any property in New Jersey or across the country, to give you just an idea of what your down payment would be and closing costs.
Okay. So just to clarify, because people are focusing on the money right now, I'm sure at this
Right.
point. So 3.5% down payment plus an additional, let's say 2% in closing costs. So in total, 5.5% of that purchase price is going to go towards your down payment and those additional closing costs. And Joe, I guess I'm the bad cop because I like to tell my buyers it's going to be an additional 4%, no more than an additional 4%. And I might be shooting high, but that's fine because I rather my clients have more than enough money than not enough money. So
Absolutely.
for our audience, anywhere between 2 to 4% in additional funds on top of that 3.5% down payment is what we need. Okay.
Would you like to see an estimate here of
Let's
actually
do
what
it,
I'm
man.
talking about? So I have a program that I use. It's called Mortgage Coach. And what I do with all of my clients when I'm doing pre-qualifications is I send them the pre-qualification, excuse me, their pre-approval after we do the pre-qualification. That's two different things. And it actually will give them an estimate of all of their down payment and closing costs. So you can see here, this is something that I provide my clients. Give me a second here and I can show you exactly what we're looking at together. So if you click here on full info, you actually will see a breakdown on a $450,000 purchase.
Mm-hmm.
This is something I sent out to a gentleman a little earlier today. Here are your taxes.
Mm-hmm.
Here's a hazard insurance estimate,
Mm-hmm.
mortgage insurance, and what his monthly payment would come out to be. And
Mm-hmm.
then this is the topic we're talking about right now. Here's his down payment.
Mm-hmm.
Here is any attributed points to get that better rate.
Mm-hmm.
Upfront mortgage insurance. These are your prepaids, your taxes, your upfront mortgage payment if necessary. So everything that you're looking as far as down payment is provided in this mortgage coach program. And here is actually a more clearer
Wow.
breakdown.
Wow.
So
And you
this I
provide
provide for
all this
free.
to your clients up front?
All of my clients get this along with their pre-approval,
That's crazy. Okay.
and we can do this for a 203K as well.
Okay.
So
Now, how long would it take for someone to purchase a home through the 203K product that you have? Because it sounds like there are some additional steps.
yeah, so there are some additional steps. So what happens is we have to find first a construction company that is insured and bonded, and they also have to have workers' compensation. On my travels, it's always good to have a good construction person in your back pocket, and I'm always reaching out to new construction people. And it seems like some of the problems is that they don't have workers' comp. It is a HUD guideline. It is one of the guidelines. They must have workers' compensation. So it's you have a quick conversation with them. You explain to them the benefit of wanting to add that to their list of everything else they have to pay for, because it's just going to bring them more business. They do have to be certified, which my bank will take care of. So if the construction company does have those first two things, but they're not on the HUD list of approved construction companies, we can add them. It's fairly simple. So they would come out, give you a scope of work, provide all their documentation, you know, uh, their insurance programs, the workers' comp program, all the LLC information would be handed over to us. We then hand that over to our 203K department. They start to review it. They're going to send out a HUD appraiser
Mhm.
to see exactly what needs to be repaired. And there is another appraiser towards the end of the purchase as well that will come out and reevaluate once all the repairs have been completed.
Okay. Now, I know we talked about, repairs that you can or can't do, limitations on that. Does your mortgage company dictate which repairs a buyer has to make or can make?
Good question. That would be based off the appraiser. So if the
Okay.
appraiser will actually dictate that if they if they see something like a roof caving in, or they didn't put that on the scope of work, they're gonna bring that to the attention of the construction company and the buyer.
Okay. Now, you mentioned appraiser, and the audience may not know what an appraiser is. They may know what a home inspector is, it's someone that comes
Mhm.
out and inspects the home. But what's an appraiser? What's their role?
The, for FHA and conventional loans, they have two different types, but we'll focus just on the FHA right now. They're essentially just they're the investigator for the bank. So they're going to make sure that if, let's say, it was just a regular FHA loan, they're going to make sure that the house is not in disrepair. There's no lead paint exposed, that the front sidewalks are not cracked, the handrails in the house are sturdy. Um, and then they also will give you an evaluation. They're basically going to tell you an estimate of what the house is worth at the same time.
Okay.
That's their primary job.
Okay. So in essence, they're there to protect the mortgage company's money and to protect the buyer to make sure they're not
Exactly.
overpaying.
Because who who who's got a ladder or a drone to check every roof, right?
Right.
That's what these guys out to do, make sure there's no sort of leakage or anything like that. That once the person moves in, you know, God forbid, the roof caves in. Now the person walks away from it because it's a $20,000 cost that they weren't anticipating, and they walk away from the mortgage. So this is what the bank is sending out the appraiser to do, to inspect it and make sure that the house is in sound condition.
Okay. Okay. Now, can you get this 203? Can you get this to purchase any kind of home that's out there?
You can do multifamilies. Singles are a little bit easier, but you can go up to a four family.
Okay.
You could add additions as well. You can add an addition to a house as well with the
Wait. So
203K.
you can add an addition with the 203K.
You can, yes.
So
So if
someone
you want to
found
go
like a
one level
ranch.
up,
Someone
you
found
want
a
to go
ranch.
one,
Can they add another level to it?
they can add another level to it.
Get out of here with a 203K.
I don't make the rules. I just give the information out.
Wow. So to the audience, if you find a ranch, which is hard to find, if you find a ranch, you can literally add another level to it, granted within reason of your purchasing power,
That's what I
and
was gonna
put
say. Exactly.
3.5% down plus your
Right.
closing costs, and you just doubled the size of this house that you're about to buy, and it's
Absolutely.
repaired and renovated to your
Absolutely.
liking. That's
Absolutely.
crazy. That's crazy. That's crazy. So, Joe, let me ask you, in case people outside of New Jersey are watching this, because I'm licensed in New Jersey. However, my network goes U.S., Canada. If anybody needs a referral in other states, Joe, where are you licensed? Are you licensed outside of New Jersey or just New
I'm
Jersey?
licensed in New Jersey, but one of the benefits of my bank is we're actually licensed in all 50 states. So if someone comes to me and say, "Hey Joe, I want to purchase a property in Texas," right? I want to do a 203K loan in Texas, right? I'm moving from New Jersey to Texas. We have a transition team that will actually allow me to work the deal for my referral, even though they're purchasing in a state where I'm not legally licensed. So it'll essentially be the transition team that will put us in contact with the loan officer that works within my company in Texas, and they will allow me to basically work the deal along with the expert in Texas, because uh, closing costs can depend from state to state.
Awesome, awesome, and that's how I work as a broker salesperson as well. We would do like a referral, so to speak, but I would still be able to, oversee that transaction and sale to make sure, if you are my buyer, my client, to make sure you're being serviced the way we would expect you to be serviced. And Joe would do the same thing from a money perspective.
Does the person actually have the person you're referring to have to work within your brokerage or can it be anyone at any other real estate company?
It can be with any other real estate company. Obviously, the preference is anyone that works for Exit Realty
Okay.
International, obviously. But yeah, it could be anyone. Any of my referrals, best believe I'm on top of whoever I send you to, because at the end of the day, that's a reflection on me. So we want to make sure you
Again,
get
that's
the
a great
best service.
question. That's a good point you were bringing up when you asked about that transition, because what's going to happen is the same team that works my deal in Jersey is going to be the same team that works the deal in Texas. So
That's
it's all
awesome.
under one roof.
Yeah, that's awesome. Joe, how do people reach you, man?
I'm on Instagram. I'm on Facebook. As you see, Joe Does Mortgages. I can be reached also at 908-669-9091. It's my personal cell phone number. I can be called or texted anytime if you want a free analysis, like the mortgage coach that I showed. I'll be more than happy to help anyone out there across the United States.
That's awesome, and I'll put those same details in the description for the video as well. So if you guys want to follow up with Joe and or myself, just look in the description below. And Joe, man, I can't wait till you come back next
Pleasure.
week, man.
We'll see you next Monday.
All right, bro. Appreciate you.
Happy hunting, everybody.
Bye, guys.